Well, Friday's WASDE report sure put some life into the grain and oilseed markets. Today we'll look at canola. We'll look at canola on the futures, and we'll look at canola in Saskatchewan, which is basically the Saskatchewan and Alberta and Manitoba market, and I'm sure it applies to the northern states as well. My name is Trent Klarenbach with Klarenbach Research. Today is January the 11th, 2025. So the first chart here is the canola weekly chart. It's canola futures. It's usually in the March contract for the price. And when we look at this chart here, we can see two moving averages. The top one overhead is the purple 200-week moving average. It's starting to decline. This green one is the 50-week moving average. And we can see that over the past 5 weeks, we've managed to close above this now flat to rising green 50-week moving average. Now, I like this. I think this sets up an opportunity for a rally. And I do believe that we'll see a convergence between this price and the purple 200-week moving average overhead. So they're going to meet each other at some point here in the near future, relatively near future. And the question is whether it's going to, is the price going to move up to the 200-week moving average or consolidate sideways, allowing the 200-week moving average to come down to the price. So it'll be interesting to see what will happen here, but I happen to think we're going to see a rally in the price. I've been had this 660 price on my radar for quite some time, and even 700. So let's take a look, and I'll put on some more annotations here to show you what I am looking at. So what I have is a Fibonacci retracement level from the May 22 high down to the September 24 low. And you see this, what I consider important, a critical Fibonacci retracement level at the 23.6% retracement. That's sitting right at 699, around that 700 level, and which is not surprising. It's a round number. 700 is a round number, and you anticipate some sort of resistance, some sort of reaction to the price at that level, as you do at the 23.6% retracement. So I'm anticipating a rally up to that level, and if it does happen, then I expect to see some sort of selling going on at that level. Maybe the algos kick in, start selling, and maybe it's actually at the anchored volume weighted average price from that level also, which is what it represents is the average price paid per contract since May 22nd. So you can see the price has been really trading below that anchored volume weighted average price, with few exceptions, and it's been over a year. It's been below that VWAP level. So what that means is the average contract holder has been losing money for that entire time. And now if the price gets back to that level, you would think after a year or maybe 3 years of being underwater in your trade that you will look to break even and sell and exit your position. And we anticipate that to happen around that 699, 700 level. There's a little bit of previous support and resistance here, even going back to 2021, but it'll be a significant level. I think the price will get there. But first we have to get above this anchored volume weighted average price at 650, 648, 650, and this overhead resistance here at 660, 666, somewhere in there, 670. So, I'm going to remain neutral until we get above those levels, but I just feel this price is going higher. I feel the price is going up to 700. Let's look at the daily chart. And you can see we're above the purple 200-day moving average. The 50-day moving average is below. We got this rally yesterday, nice 2.67% rally. I think we're going to get up to that level and maybe find a reaction there, some selling stepping in. Maybe give us another opportunity for an entry level back around 630, 635. If that happens, that might be a good opportunity to take a lower risk, higher probability entry for a long position. Now, if I was a producer, and I am not, where would I look to get long? Would I chase this market and with a long entry to replace cash sales? I wouldn't. I would look, again, I'd look at that 630 level, 625, 635 level. I would look for another opportunity to go long on some futures. And certainly we get above 650, then I think my conviction of higher prices certainly increases. And a conviction of the rally into that 699, 700 level is certainly increased as well. When we look at our member area on our website, we can see our sentiment ratings. I'm going to remain neutral until we get above those resistance levels. I'm bearish on the longer term as we respect the longer term downtrend. You might remember that 200-week moving average is in decline. That's not a good sign. It suggests lower prices for a while. But let's keep an eye on this. We'll look down at our charts. I'll scroll down, show you what I'm looking at on Saskatchewan. And you will remember how we identified this trend line, we broke above it, came back, and this is a retest. Now we're back above. We're also above these moving averages on the weekly. And it's a different chart than we're seeing on the futures, but there's reasons for that, and that would be the basis that's available to Canadian farmers, for instance. Let's take a look at this weekly chart. It's a linear chart, so you notice the equal increments on the y-axis. And we've identified this head and shoulder pattern, potential head and shoulder pattern forming. We look at the left, inverse head and shoulder pattern, that is. Look at the left shoulder head and a right shoulder pattern forming. Now, if we break this neckline here, then that's a completion of the head and shoulder pattern. I feel good about this. I think we do see a rally. I think we break this neckline. I think we get above that $13.50, $14 level, and we see a rally maybe as high as 16, 17. Maybe we can get up to 18 at this previous resistance levels. That'd be nice to see. When is that going to happen? Is it going to happen before the fall? I have no idea. Time analysis is difficult, but it's something to be aware of, and that's what we're looking at. My name is Trent Klarenbach. Sunny in Saskatoon. Life's good.